Hi, good morning, good afternoon, good evening, as the case may be for all of you watching today. Thank you so much for joining us for this session jointly sponsored by the Center for the National Interest and Energy Innovation Reform Project, looking at the kind of energy markets in Europe and the disruptions surrounding Russia's invasion in Ukraine and sanctions. We're really thrilled to have with us today two outstanding speakers to address those issues. The first is Andreas Goldbau, who's the director of the Willy Brandt School of Public Policy and the Franz Haniel Professor of Public Policy at the University of Erfurt. Andreas is in Berlin. We provided some additional details on his bio in the invitation, but in the interest of expediency here, I will leave that for everyone's reference and turn right away to you, Andreas, for your perspective on how all of this has evolved.
Well, thanks, Paul, and for having me, and it's a great pleasure to be on the panel this morning with you. Look, I thought I'll talk a little bit about how a boycott of oil looks like, because that's what we're talking about this week. I'll dive a little bit into the politics of it, particularly in Europe. And then also ask what the prospects might be when it comes to extending all of this to gas, and I'd be very happy to detail some of that then further later on during the discussion with Nikos as well. So maybe just quickly on what happened this week. I mean, essentially what we're looking at is the sixth embargo package, if you will. It's a ban on Russian oil. If it is approved by the Council, which isn't the case yet, then essentially what we're going to see is a gradual phase out of oil imports within the next 6 months from Russia, a gradual phase out of oil products within the next 8 months. And some countries might just simply get longer because they find it hard or consider it hard to replace Russian oil because of infrastructure bottlenecks. Just in terms of shares of overall Russian oil exports, we're talking about 60% roughly, because that goes to Europe. So it's a significant share of Russian oil exports overall. Russian oil makes up about 25% of consumed oil in Europe. So that's just to put things into relation. Now, we had a bit of a discussion around whether European unity might actually be there when it comes to those sanctions, and the jury is still out of whether that unity will be there. Hungary has threatened a veto, and Slovakia, as I said, is also not very happy with going for an oil embargo. But even without those countries, and they might get an exemption from the sanctions regime, even without those two countries, the embargo will significantly shrink Russian oil sales to Europe. Those two countries essentially are less than 5% of Russia's oil exports. It doesn't make any difference. That gets me more into the politics of it. And here the question really is how do European countries and their population view all of that? So if you ask the German population, and these are latest polls, then 77% of them are in favor of economic sanctions, of tough economic sanctions. A good majority is in favor of an oil and gas embargo. And what the German government is now finally, because they have been dragging their feet on an oil embargo, what the German government is doing finally is certainly supported by the majority of the population. If you look around Europe, it was a good place to start in Germany because it's the largest energy consumer and one of the largest gas importer and oil importer in Europe when it comes to Russian energy resources. But if you look around Europe, the picture is not very different in Italy and France, although in France, for instance, what we've seen during the presidential elections, inflation, domestic purchasing power became a real issue. The cost to households, so household level impacts became important topics. And that's already where you see the pressure points, if you will, when it comes to the European population. You have the same thing in Italy, and the further down you go into Eastern and Southeastern Europe, the more difficult it gets when it comes to public support, but notably when it comes to political support. Hungary, as we know, is opposing the sanctions as they stand. The reason why Slovakia does it is less because they themselves oppose the sanctions regime, but it's more because the refineries in the country are run by Hungarian companies, and specifically MOL, which is the national oil company in the country. So by it's more or less the
I think we lost your audio.
You get a bit of a more. Oh, I'm sorry. I'm not sure.
You came back. You came back. I'm sorry to interrupt.
Okay. So bottom line, it's remarkable that we have a sanctions front standing despite the fact that there are some differences within European countries and their governments when it comes to those sanctions regime. Now, the question then is, what does the sanctions regime and the ongoing situation in Ukraine mean for Europe in terms of economic impact? And the long and the short of it is there isn't that much so far. I mean, growth forecasts are down below 3% for the Eurozone, but there is no recession as of yet, and there's no cross-industry impact because the gas keeps on flowing, the oil keeps on flowing. But households do feel it. I mean, just by comparison, a gallon of gas costs you around $6.60 if I do the math well in Germany these days. There's lots of taxes on it, but you already get a sense of where this goes. And natural gas prices have been hovering around 100 euros per megawatt hour for a couple of days. We even had times when they were twice that. That compares to, roughly 20 euros a megawatt hour in the fall of 21. So we're talking about 5 times the price for natural gas these days, and spot and futures markets. Electricity prices have soared, and that all of that translates into inflation, which is strong, and there's a further upward pressure stemming from increased oil prices as possibly a result of the sanctions regime. Which gets me to a third point, which is why the sanctions regime on oil is gradual, and there's some politics to it, but there certainly is a fear of this driving inflation. There certainly is a fear of oil prices if they go up as a hike because of a sudden embargo having an impact on some countries which might break out of the sanctions regime. And indeed, some countries like Germany have been dragging their feet because they were fearing some bottlenecks, particularly in Eastern Germany. They now feel it's manageable in terms of supplies from Russia, but other countries are not comfortable yet. So there is a gradual phase out as a result of that. But also there is a need to give markets some time to adapt. I mean, at the very end, we're talking 3.5 million barrels of oil that will be affected. That's roughly what Russia sends west. And so if I do the math well, that's 4% of the global market. That's significant. You cannot just replace that overnight, which means you need to give markets some time to adapt and react to it. And the more sanctions-related argument to that would be the moment you cut off Russian oil supplies too quickly, it sends prices north, which means Russia may sell less but gain more because of the windfall. And that's precisely the opposite of what you want to have. And finally, a gradual approach might also give you a little bit more time to talk to, say, India and other consumers, which at the moment are eyeing the discounts at which Russian oil is offered. And so what you want to do is essentially you want to make sure that oil doesn't get sold elsewhere instead of Europeans buying oil somewhere else, and instead Russian oil goes to, say, India and other places. So there's a lot of good reasons to taking a gradual approach, despite the fact that it means that Russia is still making money on their oil exports, and that's a significant amount of money every day. And now, finally, maybe to the question of will the sanctions regime be extended to gas. And that's where we get into a real headache, because just in sheer numbers, and sorry, that's the metric system, we're talking about 150 billion cubic meters of Russian gas that, that gets sent to Europe every year. Germany gets a third of that, 100 roughly. And it's not Germany getting it, but the consumption in Germany is about 100 BCM. So it is a significant amount of gas that's being sent west. Now, all of that Russian gas essentially comes through physical delivery. There's a little bit of LNG, but mostly it comes through physical delivery by pipelines. And that means there's a strong infrastructure component to it. LNG imports and the capacity of LNG import terminals is at its limits, precisely in the places where it is needed in Northern Europe, in Northwestern Europe. Southern Europe has capacity, but is not connected to the Northern European demand centers. Plus, you have a very, very tight market situation. I mean, we're talking about an LNG market, which is really tight. There's very little spare capacity. And that means you have somewhat of a perfect storm, really, you know, when it comes to asking how you want to replace Russian gas. And that's precisely, and I'm afraid Russian, US Freedom LNG will not do the trick here. It's just not going to be enough. So that's precisely why it has been so politically charged. And that's why some countries, including Germany, have been so hesitant to put the brakes on Russian gas supplies. And I don't expect that to change anytime soon. So the reality of it is we'll still keep on importing Russian gas unless they cut it off themselves, which is a possibility every day. And we will keep on sending, what, some 400 million dollars east every day. Despite the fact that, we're talking about an aggressive regime waging a brutal war in Ukraine. Maybe just to conclude all of this, because people have been asking whether the Europeans cannot just green themselves out of this mess. And here the long and the short of it is they're doing it. I mean, they're bringing some of the brown stuff back, including coal and other dirty energies. But at the same time, they're ramping up efforts when it comes to offshore wind, solar. There's a lot of process innovation going on in industry, replacing gas with other feedstock. The German government alone is putting around 200 billion into climate measures, as part of which energy transition policies are supported. And there's a whole bunch of other things, including the Repower EU plan on the European level supporting all of this. Now, the details of that need to still be panning out in terms of real delivery. But what I would think is, you know, even though we're not going to see any way for this to replace Russian oil or gas supplies, certainly not oil, but to some degree gas supplies, in the longer run, we might still face those bottlenecks in the short term, and that's precisely where discussion is centering on at the moment. So I guess I stop here, and thank you so much for having me.
Thank you very much, Andreas. Really appreciate your comments there. Let's turn next to Nikos Tsofos, the James Schlesinger Chair for Energy and Geopolitics at the Center for Strategic and International Studies here in Washington. And like Andreas, with a much longer bio full of all kinds of other accomplishments and publications and things. But we'll limit that for the time being. So Nikos, thank you so much for taking part this morning. We'd really welcome certainly your perspective on what Andreas said, your broader views of the situation we all find ourselves in here, and the U.S. component to all of this.
Well, thank you very much, Paul, for having me and for inviting Andreas. Excellent presentation. I am in very large agreement. So I'm going to begin by just a few areas that I wanted to reinforce or supplement to where Andreas. And I think the first thing I would say is, I think there's a real question about what happens to Russian oil once Europe sanctions it, right? Because there is essentially, I like to think of it as three main avenues for Russian oil to get to the world. There's seaborne, there's pipeline, and there's pipeline to China, right? So we're not going to touch the pipeline to China, the pipelines to Europe. They don't have as much flexibility, but we don't have as much flexibility either, right? So there's that codependence, and Andreas talked about it, especially in Central Europe. And there's the seaborne oil, right? And we saw some discussions about trying to sanction, the shipping services, the insurance, the other sort of ways in which Russian oil gets to the market. But I think that's an area where we really have to talk about what is the plan here. Europe doesn't really do sort of secondary sanctions the way the US does secondary sanctions. Is the US going to step in and do that? How are you going to manage the diplomatic fallout with the countries that are now importing Russian oil? As Andreas said, we haven't seen too much of a price impact yet, but it's also because we haven't actually sanctioned Russian oil yet. All right. I mean, on both of the oil and the gas side, the flows are relatively similar to what they were before the war. And I think almost every week we have new estimates about how much Russian oil is shut in. And then 2 weeks later, we realize that, no, actually, that wasn't really the case. And so I think there's going to be a real question around, how do we think about, where this Russian oil goes and how much of a squeeze are we going to put on the market to try to shut Russia out of the system. As Andreas said, these are not trivial volumes, right? I mean, there isn't 3.5, 4.5, depending on how much we target, million barrels a day just kind of sitting around to come onto the market. And one of the challenges has been that you could get it two places essentially. You get it from OPEC Plus, and the willingness of OPEC Plus to increase supply has been limited, if we can put it mildly. They're sticking to their plan. And the other place is the US. And frankly, the US, the system is kind of clogged up as we described it, right? People spent a lot of money over the last decade investing in the sector. A lot of people think they lost money or feel they didn't get the returns they wanted. So there's a great hesitancy to expand supply. And so in a way, the natural way that you would address, trying to sanction Russian oil, which would be to have a surge of oil production from the US, that system isn't really working. Right. And so I think it needs some kind of public policy intervention. And we've written about some things that we could be doing at CSIS on unclogging that system. Right. So that's on the oil side of things. On the gas side, totally agree with Andreas on just kind of how difficult it is. And I just wanted to give you some numbers because I think, one of the things that worries me a little bit as I look at the conversation in Europe is we oftentimes do sort of country level analysis as opposed to system level analysis. So I'm not going to say it's easy, but it's relatively easy for any single country to say, I can get off Russian gas. If you're connected to the world, if you have the right infrastructure, there's a lot of countries in Europe that everything else being equal can get off Russian gas like relatively quickly. The problem is that once you scale that up to the European level, it doesn't add up. Right? Because the way each country is doing it is because they're buying LNG or they're buying some gas that is now going elsewhere. And so I think there's a real need for system level analysis of thinking about the dependence on Russia rather than a country level analysis. And oftentimes the country level analysis takes you, I think, down the wrong path and making people think like, well, those guys did it, why can't you? It's like, well, the more of those guys who do it, the harder it becomes for everyone else. And so I wanted to give you some numbers that really worry me, right? So, the European Union has talked about importing 50 billion cubic meters of LNG this year and through 2030. 50 billion cubic meters is not a trivial number. I like to say that if you take all the imports last year of Pakistan, Bangladesh, Thailand, Malaysia, Singapore, Indonesia, that's 40 BCM. Like all of the LNG into the Americas was 26 BCM last year, right? And by the way, Europe produces a lot of gas still. And if you include the UK, European production is declining by about 8 billion cubic meters a year. So by the end of the decade, you will have lost as much production probably as 50 BCM, right? So the math is really difficult. It's really difficult, right? And so the question is, how do you get yourself out of this position? And the reality is that for the next 4 or 5 years, there's very little you can do because you can't bring new supply into the market that quickly. All you're doing is rearranging volumes. If you're going to be rearranging volumes, you're essentially creating ripple effects where the European crisis gets exported to the rest of the world. How do we manage that? How do we contain some of the fallout of that? How do we help countries cope with that? Those are serious public policy questions. But there's also a serious public policy question of Russia is too big to just cut out without the rest of the world increasing its gas supply. And so the question is, how can we do that in a way that doesn't undermine our climate agenda? Right? Can we get additional LNG from the US, for instance, from new projects, not the existing? The existing system is sort of maxed out. But can we get new projects and use public finance or resources in a way that makes them consistent with our medium and long-term climate goals? I think that's really where the conversation has to go. And oftentimes, we're just talking about rearranging volumes, and just Russia is too big to do that. Russia is just too big to merely manage by moving things around. If we're trying to seriously curtail the volume that Russia sends to Europe on both oil and gas, and to the world, which there is flexibility on the oil side, there's less flexibility on the gas side, although there's some flexibility on the gas side, from the LNG. But we have to really think about, how do we do that? Let me just make two final observations, and then we'll get into the conversation. One, I totally agree with Andreas in terms of people that are hoping that Europe kind of greens its way out of this crisis. I mean, it's not like Europe was not intensely focused on decarbonization until this crisis happened, right? I mean, Europe has had a long trajectory to decarbonize, and if anything, it is as well prepared as ever to have a blueprint to accelerate the transition. And I have no doubt that this crisis will accelerate that transition in Europe. I'm not sure about elsewhere, but in Europe, because the cost of fossil fuels is more expensive. There is a focus of strategic autonomy and all those things. So I have no doubt about 2035 and 2040 that Europe is going to emit fewer greenhouse gases than whatever we thought it was going to do before the war. The real challenge is the next, 3 months, 6 months, 2 years, 5 years, right? Because the effort, getting out of Russian oil, like by the end of the year, or Russian gas within 2-3 years, I like to say it's too soon for energy standards and it's too late by political standards, right? That's sort of the tightrope that Europe faces. Right? The final thing is, obviously, this fundamentally changes the role of Russia in the global energy system, right? They're going to be weaker, more isolated. I think there is a argument being made that I've taken issue with, which is that, once we do this, once we get out of hydrocarbons, we're not going to have to worry about this stuff. And it's true that the specific issues that you face with Russia might go away. But anyone who has read European history knows that Russia is there. Russia is part of the European balance of power. Russia has intervened and meddled and been part of conflict and wars, sometimes provoked, sometimes offensive, long before we were using hydrocarbons in the world, right? And I think it's important to remember, or to at least to think about, I've said before that a Russia that doesn't sell oil and gas to the world and is isolated and no one is trading with it is probably not going to be a very fun Russia to be living next to, right? And so I think, how do we think about the strategic role of Russia in the Eurasian system while we try to cut out its main business? That's going to be a really tough question. It's not the moment now to talk about that question, because the moment right now is obviously to stop the war and to reach as close as we can to Ukraine regaining its territory and ending the war. But eventually we have to be talking about where does that take us, and what relationship do we want to have in Russia. And I think sometimes we overestimate how much of a strategic release the energy transition is going to deliver. And I think thinking hard about that question is going to be important.
Thank you. Excuse me. Thank you very much, Nikos, and also Andreas. I think both really excellent remarks to get us started here. A lot of very helpful information and also kind of thought-provoking comments. I'm going to open it up now for questions. Those who do have questions, please use the Zoom Q&A tab to ask those. We've already got a few in there, and I will just jump right in to asking those. The first one, Andreas, actually is for you from Tomasz Szmal in Poland, who actually I met at the Stiftung Wissenschaft und Politik in Berlin when you and I first met, I think about 15 years ago during an energy dialogue we were doing about Russian energy and European security. So how the circles close on these matters. Tomasz, thank you for your question, and it's great to hear from you. He's got a provocative question for you, Andreas. Would you agree that from today's perspective, the EU's energy dependence on Russian energy was a mistake?
Well, thanks for the question, and Tomasz, great to have you on the conversation. Two things to that. One, there generally, I think, has been for a long time, the idea, and I think it's a pretty powerful idea, that the moment you exchange goods and services, and the moment you trade, and the moment you specialize, and the moment you put assets and capital into that specialization, that this actually leads to a rise of the costs of belligerent behavior. It's a very simple idea. You have skin in the game, you have something to lose. You don't behave in ways you shouldn't be behaving because you essentially will face the costs of doing so. And that's precisely why a lot of the international system has been designed in such a way that it's not only Ricardo and comparative cost advantages that drive economic integration, but also there's a very powerful security narrative around economic integration. And I think to some extent, that is also what has been driving energy relations in Europe. The whole idea that the Russians have something to lose the moment they end up, or they have to stop supplies to the west of Europe, was a good enough reason for a lot of European countries to say, let's have economic relations with them, let's trade with them, let's exchange goods and services, and with the Russian side predominantly sending energy resources west, whereas the West predominantly sent manufactured goods towards the east. And that's in the end what the deal has been about for a long time. Now, given the aggression and the brutal war that Russia is waging in Ukraine, we can call this naive. And particularly in Germany, there has been a certain naivete about that. And personally, I have to say, I never thought this would happen. I've been mistaken myself. It doesn't make things any better, but I think that's precisely where economic theory and political economy and international political economy models face their limits. There is a certain rationale pertaining to the Russian leadership, which has very little to do with the big picture models we tend to look at. And so just to answer your question, was this a mistake? I think with hindsight, it was a mistake. It was particularly a mistake to let dependency ratios go up to a level where they wouldn't be easily managed anymore. I still would maintain that it was a good idea to integrate the European energy market, particularly the gas market, because that's the only way you can manage big, almost dominant external suppliers. But still, I guess the European decision makers have been have allowed it for a situation where one supplier became dominant. There is an economic rationale to this, obviously, because the Russians have been offering prices at levels that others didn't offer. It was very difficult to get LNG in at the price levels that you would get Russian gas in. And a lot of the European economic model is built on the idea that cheap energy inputs allows the European manufacturing system to work so that they become competitive on international markets. With US LNG, Qatari LNG, and other LNG, it might actually have been very, very difficult to achieve that simply because of the price impact. But maybe that would have been a price to pay to avoid the situation that we have right now. With hindsight, I would say it was a mistake, but I think I'll leave it at that.
Thanks very much, Andreas. Nikos, it wasn't directed to you, but if you have any brief observations on that question, you're certainly welcome to offer them.
Yeah, I very much sympathize with what Andreas said. I mean, I've been going back and forth on this a lot. I mean, I think, there is a, was it a mistake in 1970 to say like, hey, we should trade with one another and build a relationship? That's a very different question, I think, than trying to ask yourself, over the last 10 years, there were opportunities where Russia grabbed a bigger share of the market when other suppliers could have grabbed a bigger share of the market. And that, is a slightly different question of like, what could you have done in the last 10 years because if you look at the history, Europe produced a lot of gas for a long period of time. And so it was actually very dependent on Russian imports, but imports were a small share of total consumption, right? So, we have this oddity where Europe is actually as well prepared to cope without Russian gas than almost like ever in its history in terms of infrastructure and connectivity, while at the same time it's the most dependent it's ever been on Russia, right? So I think it's difficult to sort of try to put this in an entirely binary, like is it good, is it not good, right? As I alluded to in the end of my remarks, I mean, I think that the idea that somehow, if we hadn't done this, like none of this would be happening. Like I'm not quite sure this is true when I hear like of the rhetoric from Vladimir Putin about like why he's doing this and his views of the world. Like it's kind of hard for me to draw an incredibly clear line between hydrocarbons and the war. Obviously, hydrocarbons have paid for the Russian economy over the last 20 years relative to what it was when Vladimir Putin took power. But I think the other part is, again, just trying to be a little bit provocative, is when I have Americans and I try to put on my European hat, and Americans say, how could Europe let itself become so dependent on Russian gas? And say, well, how did America become so dependent on China? It wasn't the exact same idea that let's trade with one another, let's integrate them into the system. They'll become, a responsible stakeholder. They'll play by the rules. We will have leverage with that, right? It's not a fundamentally dissimilar idea that produced a level of dependence that after a certain point has its own logic. And we've seen even at times, during the Trump administration, where you try to sever those ties, how difficult it is to sort of sever those ties and the cost of severing those ties. So again, I guess, the final thing I'll say, and I realize I'm speaking to just look at the audience here and you, Paul, real Russian experts here, but there's, if you look at sort of, even Soviet history and I'm an amateur by all means, not an expert, but kind of like the Soviet economy was like catching up until it became a big hydrocarbon exporter. And there's a lot more evidence of Dutch disease and resource curse in the Soviet history than it is of, great empowerment as a result of hydrocarbons. So anyway, I'm not giving a very clear answer because I'm struggling with this myself. And I think we have to be sort of intellectually honest about the various ways to be thinking about this question and not, to compare the present to some alternative that I'm not quite sure what it looks like. I don't, Europe went to the Soviet Union to get Soviet gas, in part to diversify away from Middle Eastern oil after the 1973 oil shock, right? Russia was the diversification. Russia was the solution, or the Soviet Union was the solution to excess dependence on Middle Eastern oil, right? So what was the alternative? I don't know. So anyway, I guess I'm just rambling a little bit on how difficult it is to think and make a very definitive statement about whether something was a good idea or a bad idea, especially for something that goes back 60 years.
Thanks very much to both of you. I think very thoughtful answers to a hard question. So I've got 5 questions here already from the participants. We have about 25 minutes. I have a couple of questions I might like to squeeze in myself if I can. So I'll try to encourage, to the extent it's feasible, somewhat shorter answers, just to keep us moving along. One question that came in the chat, and again, please everybody actually use the Q&A rather than the chat, but one question that came in the chat from Tom Witcher to the two of you, to what extent has Qatar benefited from this whole circumstance, politically, economically? Any thoughts on that briefly?
I can take a quick crack at that. So, it's benefited in the sense that if you try to go around and look for LNG, you go to Qatar, right? So in that sense, people are showing up in Qatar that normally wouldn't show up in Qatar, right? So that has some cachet. At the same time, if you look at actual LNG flows, a lot of the world has actually switched, that has the capacity to switch, is sending more to Europe. You have more from Russia, you have more from Africa, Americas, the US. Like, the system is shifting. Qatar hasn't really shifted. Actually, April, I was just looking at the numbers. April is the first month that you're seeing a little bit of a bump in terms of European imports from Qatar. They're still relatively low to where they've been in the past. And so I think that raises the question of, like, is it because they don't have the flexibility? Are they getting just a better price in Asia? They also did some maintenance in February that was kind of like not a great time. But long story short, in the short term, you haven't really seen Qatar send a lot more LNG to Europe. But more broadly, of course, they benefit because they're an exporter of oil and gas, and higher prices sort of benefit them. And so they are exposed to these commodities. I think, they were doing a big expansion. They're doing a big expansion of their capacity. Insofar as there's a scramble for LNG, I think that sort of obviously benefits them. At the same time, if you're thinking about medium and long-term demand for LNG and you're looking at LNG prices that are $30 per MMBTU, that's not a great sign for medium and long-term demand for LNG, right? So I think there is also a question, if I were a holder of resources, is the demand really going to be there, or am I just going to destroy so much demand over the next 5 years as we cope with this crisis that the market will fundamentally get restructured? So we don't know that yet, but Qatar is going to be one of the countries that will get most affected by such an eventuality.
Andreas, anything to add there?
No, just maybe a side note, but in a fun one. I mean, the very fact that Qatar turned their back on Europe has a lot to do with the European Union actually pushing for market integration. And they did away with all the things that Qatar would have liked to see, for instance, contracts with destination clauses and things like that, which the European Commission said, no, you can't have, because that violates the liberal market design, and which prompted the Qataris to say, well, let's sell to Asia then. And they still haven't gotten their way. To the contrary, the European Commission is still maintaining a pending antitrust case against the Qataris, and that might still actually, in fact, maybe that's an explanation or a part of it, prevent them from coming back, because they're not getting their way when it comes to the kind of contracts they would like to have. So these things are difficult. It's not like, Habeck, our climate minister and energy minister, going to Qatar and trying to grab some molecules, and the next day they start flowing. It's a lot more difficult than that.
Thank you. Thank you both very much. So we have kind of some more technical oil-related questions here from Anton Fedyashin at American University. It's to Andreas, but Nikos, you may also have a perspective. There are different types of oil. How long will the technological transition to non-Russian oil take? At what cost? If Europe weans itself off pipeline oil, will additional, transportation and other costs be prohibitive? Paying for tankers, unloading at ports, onto trains, trucks, then to refineries. Any thoughts there?
I can take a quick crack on this one, and then Nikos, by all means, please come in. So maybe just two quick things. One is the infrastructure component to it. I mean, the situation in, say, Slovakia or Hungary is such that there isn't a great deal of alternatives. If you want to supply refineries there that for now depend on Russian oil, you essentially need to find ways of doing it through alternative infrastructure, and that means trucks in the end. That's, I think, what it is. I mean, there might be midterm solutions, but for now, it essentially, there is an infrastructure bottleneck that is hard to get around. You have other refineries, for instance, in Eastern Germany, which are right at the end of the Druzhba pipeline, which coincidentally is called Friendship. And that still depends on Russian oil because that's what comes out of the pipeline. But and they are not connected to a great deal of alternatives. But there are smaller pipelines that you can use and bring in oil supplies, say from Gdansk or from other harbors, and try and kind of pump them down to the refinery. You can also try and kind of find other ways by way of hauling stuff in through lorries, but here the question is less maybe, I think, one of infrastructure. It's more of, do you find the kind of crude that you need? And this is not impossible. You can blend. I'm not an engineer and a petroleum engineer, but I talked to a few, and that's essentially what I got out of it. The bigger question is, does the market provide for it at the time you need it? And so you got two things. One is a little bit of an infrastructure component. The other one is essentially the contracts that you need. And then you got a political element of that. Who owns the Schwedt refinery in Eastern Germany? Well, it's Rosneft, the Russian state-owned company. So the question then becomes, do they actually have an interest in switching from Russian fuel to other fuel? And there the jury is out. One of the reasons why the German government at the moment, with that particular part of East German refinery infrastructure, is mulling the idea of nationalization. So they've just essentially, strip Rosneft of that infrastructure and say, it's now run by the German state, and we switch fuel no matter what you say. So there's a whole bunch of things at play which are really very different for each of the pieces of infrastructure that we're talking about here.
All right, thanks. Nikos, if you don't have anything pressing, I'll try to just keep it moving here and actually give you the first crack at the next one. Former Congressman Don Ritter is asking, given the stakes, isn't it worth making a public policy case for America really to ramp up its oil and gas production and not to stifle it? Should we be fighting the administration's climate agenda? Wouldn't that send positive signals to the market?
Thank you for that question. So oil, gas, two different stories, I think. So, I mean, our diagnosis of the oil, I already shared, is fundamentally a market-driven process, right? I mean, I understand that, there's always like a pipeline here, a pipeline there, regulation here, regulation there that industry doesn't like, and I'm not going to defend, U.S. regulation across the board. But fundamentally, what we're observing is the industry is hesitant to invest because they lost money, right? Or the investors lost money, right? And you can see that in surveys. The Dallas Fed did this great survey and asked people, would you drill if the price was much higher? They're like, no, it doesn't matter what the price is. We're just not going to drill, right? So if that's the problem, right, you have to think about how do you solve it. And the reality is that for the most part, U.S. oil, because it's mostly shale, it declines incredibly quickly. So there aren't a lot of people that are super worried about 2030, 2035, 2040 and decarbonization, because you make most of your money back in the next sort of 2-3 years, which also means that the U.S. oil is ideally suited for a ramp up to offset Russian oil and then a decline as we go towards decarbonization. But it does seem to require some public policy support. And we've written some measures. We've talked, for instance, about the possibility for the US to use the SPR to sort of prop up prices and say if prices go below a certain point, we'll refill the SPR as a signal that the demand will be there. So there are ways that public policy can supplement that. On the gas side of things, it's fundamentally, the US has a ton of LNG projects that are fully permitted. All they're missing is a customer, right? Or finance or investors, whatever in that trifecta you need. And that, again, is not fundamentally a public policy problem. It is fundamentally a market problem. The projects are there. And so we've seen some contracting happening over the last couple of months. We also saw some contracting happening at the end of last year. A lot of it actually is coming from Asia rather than Europe, even though Europe is the one that needs the gas. A lot of the contracts are actually coming from Asian customers. And so I think there is a public policy role to try to make sure that this investments happen in new LNG supply in terms of solving the problem in the late 2020s. And again, we've articulated at CSA some ways in which Europe could incentivize some LNG supply and put some boundaries around it so it doesn't undermine its climate agenda. So there is a way to sort of reconcile those two agendas of energy security and decarbonization. But I wouldn't go as far as to say, the decarbonization is the problem or the climate agenda is the problem. I think there are more discrete issues in each of the two sectors that we have to think about how to address and try to solve the specific problems that each of the two sectors faces in ramping up production.
Thank you very much. So we've got, 14 minutes here and 4 questions. So I'm going to try to combine some of these a little bit and condense somewhat. We have a couple of questions, one from Wolfgang Porzik and one from Christian Whiten, that Andreas kind of speak to what might be considered or reconsidered, in Germany. Is there a chance that Germany might reconsider its stance on nuclear, being one of those, and the other being, when this conflict ends? Is Germany going to consider going forward with Nord Stream 2, or is that really off the table?
Well, thank you. These are great questions. Quickly on nuclear first. Germany still has 3 reactors running. They're going to be phased out by the end of the year. And in terms of overall contribution to energy supply, particularly when it comes to power generation, they're peanuts. That's the long and short of it. If you want to prolong them and their operation, it actually nets out because to zero, because you got to probably ration the fuel that they use because of the German nuclear industry having taken almost a decade-long decision and process now to phase out all of that. Engineers are gone, fuel is gone, the whole thing has been winded down, and it's going to be very difficult, not only in political terms but also in engineering terms to maintain those 3 reactors beyond the phase down or the phase out by the end of the year. But I think the more general issue is what kind of problem do you want to solve? And if you want to solve an energy crisis, then you probably want to look at technologies that are there that you can use. Nuclear is not what's there and what you can use. If you want to build a nuclear power plant, it takes you 10 years or more. Just look at what happens to Hinkley Point C in the UK at the moment. They have been building it for years and years and years. It runs over time. It runs, the costs are overshooting, and the whole thing is still not there. So if the Germans were to decide to go back to nuclear, and they cannot bring the old stuff back, they would probably need quite a few years to bring any of that online. So they would solve a problem somewhere in the 2030s with that decision. And that's not the problem you want to solve. You want to solve a problem right now. And that probably means you got to look at technologies that are readily available at grid parity prices, And that in the end gets us all the way down to saying it's offshore wind. It's massive solar, because prices are down, there are competitive technologies, you can deploy them, you got to take care of regulatory measures and make all these things a lot more, a lot faster and slicker. But this gets you much more bang for the buck and a lot more supply within a very short period of time than big scale, clunky pieces of energy infrastructure. And it's not me, the Germans, saying that as someone, that the Germans are very prone to nuclear and supportive of it. But I think it's generally, it's more the technicalities of it and that speak against nuclear. So the answer is, I guess, no, and even the French now have problems, but that's a different conversation. Now, maybe quickly on whether the Germans would consider going back to some of the things that they have been doing before, including gas supplies from Russia and all the rest of it. I'd say never say never. That's the first thing I'd say. And this is not to say that I would wish they would, but I can just, okay, so here's the German. And that's a very German statement. In 1945, the German had just devastated all of Europe. They had killed 6 million Jews and 27 million Soviet inhabitants. They had run havoc with an entire continent, and no one could ever think about them sitting at the table together with everyone else within the next 25 or more years. And guess what happened? A couple of years later, they sat at that table, not because they were forgiven, but because of realities changing. And whatever you think of this, the only point I'm trying to make here is I'd be very cautious of saying we'll never trade with them again. We're never going to have any political relations with them again. They're going to be a pariah state forever because of everything they have done in Ukraine. I'd be cautious about that. So I'm also going to be cautious about any statement pertaining to economic relations, energy relations, and everything else. I don't think, to be perfectly honest, that Nord Stream 2 is a pipeline that's ever going to come back. And that's simply because it's a project that has such a bad reputation that it's going to be very difficult for anyone to make the case to bring it on stream. But I would still maintain the idea that in terms of even the energy transition, Russia might have a role to play. And I'm not talking rare earth materials and all these kind of things, which are important. Just think hydrogen. The country has tremendous potential for green hydrogen, but also for blue hydrogen, depending on what you want. Ruling all of that out, I think, would be a mistake, not only because it would be historically wrong to think of that, but also because it might be actually a way of conditioning the way the country comes back into the economic system, and I wouldn't rule that out.
Thanks very much, Andreas. Let's Nikos, I'll give you the next one from Christian Whiten. Also, how big is the windfall for China and India and the discount that they're getting on Russian oil? How long do you think that could last?
Yeah, I mean, I think, one of the things that I've observed and I've written about, and I haven't looked at it in the last few weeks, so I apologize if I'm out of date, is, we have a big discount on Russian crude and then prices are higher. So if you don't look at the discount, but you look at how much you're actually earning as Russia, you haven't seen a significant reduction, right? So if the price of oil has gone up $20 and you have a $20 discount, at the end of the day, yes, you're getting a discount if you're a consumer and so you're not paying as much, but we're not talking, I think, essentially about bargain prices here, again, because the baseline has increased and so your discount is off a higher baseline. How long it will last and whether it widens or not, I think depends very much on where we started this conversation, which is oil sanctions and what kind of oil sanctions we're going to have and how aggressively the US and Europe are going to go after the people who buy Russian oil. And, what we've seen in the past in Iran and Venezuela and others is over time, countries find ways to bypass sanctions. They build up their capacity, they'll build up their resilience. And yes, there's usually a discount associated with that, but it's very hard to sort of, today make very strong forecasts about the strength of this discount over time. I think a lot of this discount kind of came in the beginning because we just didn't really know where we were going. And I think once you also have clarity on like, okay, here's the sanctions regime, this is what we're facing, in a bizarre way, it might stabilize because it puts kind of like a floor around what you think could happen. So it's difficult, I think, to talk about discounts of this type. But the core thing I will come back to is, put the discount relative to the baseline. Don't just focus on the discount as a thing.
Thanks so much. And then the last question we have is from Martin Keim. Now that the oil ban proposal is on the table, but it would take a little while to implement, do you think high import tariffs on Russian oil and gas could be a tool during this interim period? And let me toss in one of my own questions about this interim period. Do we think that Russia, knowing that the end of the ban is coming, and that throughout the period that that endpoint is approaching, it's kind of winding down deliveries? Is there a point at which Russia preemptively might cut off its own supplies to inflict a little bit of extra pain on the way out the door? Andreas, maybe you first, and then Nikos, we will give you the last word.
Right. Well, I think what we're seeing already, and that's your point, Paul. What we're seeing already is Russia trying to test the waters with selective cuts, if you will. We have seen one towards Bulgaria, one towards Poland. Nikos has talked to the system aspect of this. So in fact, they're not necessarily targeting Poland. They're targeting the European energy system, but they're doing this by way of targeting specific countries, which for one reason or the other, they find appropriate. And I expect that to continue going forward to the extent that's physically possible. You can't just, the way the European infrastructure, energy infrastructure set up is not like one single pipeline per country. It is a couple of really big pipelines serving quite a few countries. So you can't just say we cut off one of them and not the other. It will, the moment you start doing that, it will affect downstream further consumers. But I would think they will selectively find ways of testing the waters, European unity, do strategic signaling. They have done this in the past. Think about pressure in pipelines going down occasionally, signaling, what the Russian leadership would like to see and not to see, and all the rest of it. So this is something that I would expect. For the time being, we need to keep this in mind. For the time being, the Russians, and in particular the Putin regime, they earn juicy profits from gas and oil sales, close to $1 billion a day. And that's significant. And whatever you think of them, I mean, there's still an element of an economic man in them and their decision making. And I would not expect them to cut things off unilaterally, given the fact that they need a lot of that revenue to stabilize their alien economy. I mean, they're on the sanctions. They're on a massive sanctions. There's not very much left of the Russian economy that pays taxes at the moment. And you need to stabilize that. You need to keep people happy and maintain social welfare systems. And suppression mechanisms. And all these things, they cost money. So I would say rubles on top of that. So I would say there is something to be said about them maintaining stuff, but who am I to judge any of that? I don't know. Whatever drives their decisions. Maybe a final just a one-liner on tariffs. I think from an economic standpoint, it's a fantastic idea, and it has been uttered by, expressed by many people, Hausman from Harvard, Guntram Wolf at Bruegel, other people, and they have all done the numbers on various types of models. In the end, the main idea is to get some of the producer rent and shift it over to consumers, by way of raising taxes or whacking a tax on imports. The technicalities of this is not trivial, though. It's difficult, and on top of that, he would need to ask whether it might violate contracts and all these kind of things. I don't expect any of that to come through. The discussions, as far as I hear in Brussels around that, aren't such that there's a lot of support. So as much as I would sympathize with the idea, I don't think it's really something that we will see going forward, although it will be smart.
Thanks, Andreas. Nikos, final thoughts for us on either of those questions or anything else you have on your mind.
Yeah, very much in agreement with Andreas. I will say, to me, you know, I think what we're observing is the deep unsustainability of the current relationship, right? I mean, the idea that we're sort of continue to trade while, you know, in essentially a type of war with one another is just deeply uncomfortable and deeply difficult, right? And so, as Andreas said, you know, they depend on the revenues, we depend on the energy, but we also want to cut the ties. And so I think what it shows you is that the road is going to be incredibly bumpy, right? Because we're just so codependent, and getting out of it is going to be very difficult. And the second thing, which Andreas talked about, so I'm just going to like accent it a little bit, is I think this idea of brinkmanship and trying to get a little bit of the advantage back, right? I think you know, Russia kind of was faced with an onslaught of sanctions and didn't have a lot of cards to play economically, right? And you know, it like turning off oil and gas is quite a move. And so I think what you're trying to see them do is exactly what Andreas described. You know, can I divide and rule? I think the ruble idea, they kind of threw it as a wrench to see like, can they create a little bit of disunity and try to regain some of the advantage in response to sanctions, which ties back to the initial point I just made on the deep unsustainability of the current relationship, right? And the bumpiness of it. So, you know, I don't think it's going to be kind of like a straight line thing. I think it's going to be a lot of ups and downs and a lot of brinkmanship and individual actions. And that's, I think, just the reality of where we are. We're trying to cut a relationship that is just goes back a long time. It's incredibly complicated. We're trying to do it very quickly without a clear sort of set of alternatives, because that's the political will. And so how do you square those things? It's going to be very difficult. And that's just the reality. And we have to figure out how to manage that so that we, you know, try to serve the broader purpose, which is the war effort.
Thank you very much, Nikos, and also to you, Andreas. I think really outstanding comments by both of you today. A very, very rich discussion, and I hope one that helped everyone listening and the many more people who will listen afterward. When the Center for the National Interest posts this online, I'm sure it will help everyone to understand these very complicated issues. So thank you so much to you both.
Thank you.